You have huge positions in the FANGs. What do you think?
Not only in the FANGs, but any large internet enabler anywhere globally. I own 70 names globally that are involved in internet commerce. And what matters to me, Judge, is sales growth, and they have it. And, you know, I think there's going to be a major rebound because several reasons. You know, we have started on a digital journey, not just in America, everywhere. Europe, you find it in Asia, South America. People are finding the convenience of shopping and buying and being serviced online incredibly powerful, having been forced into it. It's a theme we've been talking about for 6 months, but the idea that it's going to go away after the pandemic is resolved, whenever that is ridiculous. This convenience is born forever, and the enablers of it are all the names that empower this. They're going to continue to outperform, they're going to continue to outgrow, and to not have positions in them, remembering that even an Apple or an Amazon, over its journey to its behemoth size, had multiple 20, 30% corrections. You just got to take a deep breath, have a nice glass of Chardonnay, and relax
you
as it happens, because it'll come back because it's growing.
You think that's the kind of correction we're in store for? I mean, if you look at the Apples of the world, Facebook, Alphabet, in this month, September, they're down double digits. Amazon's only down 8, Microsoft 7.5. But do you think we're in store for a larger correction? Did those stocks get too ahead of themselves?
No, I think Apple's unique. I mean, every name has a different issue. There's still a little bit of consumer electronics associated with Apple, although it gets less and less as services grow. But the Amazons and the Googles and the Alphabets and even the Shopify and the more spicy names like Zoom, that trend isn't going away. And this whole idea of, you know, stay-at-home stocks, forget about that. The digital wave is going to just keep coming. Now, either you believe that or you don't. I have made my investment thesis that we are going through a fundamental change in our economy, and I want to own the names that are empowering that. I want to own them now, after the election, next year, and the year after that, because we're only in inning 3. Just look at Nike's earnings, Judge. They're almost 33% direct-to-consumer. They don't even want the retail stores anymore. 100% gross margins, sell direct to a customer globally. Yeah. That's where we're going. That's what Apple's going to do, and who's empowering that? It's the internet giants and technology and the Googles and everybody else. And I think that's where the play is now and for the next 3 years.
All right, Steph, you've been lightening up on Amazon. Speaking of these big techs, you got to believe that if the market is going to have a good month of October, those stocks are going to have to perform well. It's hard for me to imagine that you're going to have an underperformance from FANG, mega cap tech, and the market is just simply going to brush that off and be fine. What do you think as we head into a new month in just a couple of days?
Well, I think it's more than just sales growth that these companies have. They have free cash flow growth. And that's what Kevin talks about all the time, is free cash flow, right? They have market share gains, and they have productivity. And so I agree with everything that Kevin said. I just think that they have had a nice run. And I am never going to apologize for taking a profit. I was buying Amazon below 900 many years ago. So for me to trim, it's just a trim. And I still like it. I still own it. But I'm right-sizing it, like I did with Facebook and some of the others as well. But I still think you want to own a combination of secular growing stocks for all the reasons Kevin just mentioned and that what I just said. But then you also want to have a barbell with the cyclical names, too, because the economic data is going to get better. The next couple of weeks, I think we kind of slosh around a bit. And that is because we're kind of trying to balance better economic data, but we have uncertainty about fiscal policies, about the elections. It's seasonally a bad time in the marketplace as well. So I think the market's going to have a hard time digesting all of this. By the way, if we do get a fiscal deal done, I think that's a game changer, and I think the market takes off. But in the meantime, we probably slosh around. We wait for earnings on October 12th. That's a very big week for earnings. We're going to learn more. We'll hear what the companies have to say. And then I'm going to focus back on fundamentals, which is what I like to do.
Yeah, I didn't hear you say anything about the virus, though, right? I mean, what if the virus starts raging again? Regardless of whether there is a wherewithal to shut things down in any sense, positivity rate above 3% again in New York. 15-day change in the U.S. is up 15%. You've got some of the NFL cases now front and center, and those are going to be in the headlines. I didn't hear you mention the virus at all.
No, I didn't mention the virus, but it's certainly in the back of my mind for sure. But we've also made a lot of progress on tests. We've also made a lot of progress on vaccines. So to the extent that we actually get more news there and we can actually issue these vaccines, then maybe it's short-lived. Or maybe we have to have a partial shutdown of the economy. You cannot lose $25 billion a day by shutting the entire country down. You can't do it, and they won't do it. And maybe, just maybe, if we have higher cases, maybe that brings sense of urgency to Congress and Washington and the administration to get a fiscal bill done.